Hey everyone, welcome back to Corporate Decoder, where we unwrap the stories hidden in corporate filings. And today we are diving into a report from Amicus Therapeutics Incorporated that might just reveal if they are on the fast track or stuck in traffic. Before we start, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we dissect these reports together. We are looking at a report filed on the 20th of February 2026 from Amicus Therapeutics Incorporated. It's a current report essentially telling us about something important that just happened. The big news here is that Amicus Therapeutics Incorporated released their financial results for the fiscal year ending the 31st of December 2025. Think of this as the company's annual report card that just came out. The filing itself is quite brief, mainly pointing us to a press release they issued on the same day, the 20th of February 2026. This press release is where all the juicy financial details are. So we're going to decode what that press release is likely saying based on what this filing tells us. This section is where companies report important financial information or events that could affect their financial standing. In Amicus Therapeutics Incorporated's case, they are announcing their results. This is what investors and analysts always look for. Did they make money? Did they grow? Did they meet expectations? We will not dig into this specific section of the filing itself, but rather into what the press release it references points to. Before we get to the financials though, let's quickly look at what the company does. Amicus Therapeutics Incorporated is a biopharmaceutical company. Their stock is traded on the Nasdaq under the ticker symbol FOLD. They are focused on developing treatments for rare diseases. This means their business is highly dependent on research, development, and successful clinical trials. The tables here tell us that their primary publicly traded security is their common stock. This is what most people own when they invest in the company. The fact that it is trading on the Nasdaq means it is a pretty significant company. Now that we know who they are and what they do, let's imagine what is in that press release about their 2025 results. Generally, companies report key figures like revenue, earnings, and sometimes updates on their drug pipeline. For a company like Amicus Therapeutics Incorporated, a key indicator of success is not just how much money they made in sales, but also how their drug development pipeline is progressing. Are their new drugs getting closer to market approval or approval? That's often more important than short-term sales for growth potential. This filing is made under the Securities Exchange Act of 1934. This is a foundational law in the United States for regulating the stock market. It requires companies to regularly disclose financial and other important information to the public. This helps ensure transparency and prevents fraud. This number here is the company's IRS employer identification number. It is like a social security number for businesses and is used for tax purposes. Amicus Therapeutics Incorporated is incorporated in Delaware. This is very common for us companies as Delaware has very business-friendly laws. So what can we infer about their financial results for 2025 without seeing the press release directly? Generally, for a biopharma company like this, growth often comes from successful drug launches or expanding the use of existing drugs. If they announce positive clinical trial results or regulatory approvals, that would be a major driver of future revenue. If their revenue from existing drugs is growing strong, that's also a good sign. However, the flip side is that drug development is very expensive and can take years. If they reported losses, it is not necessarily a bad thing if it is due to heavy investment in research and development for promising new treatments. The key for a company like Amicus Therapeutics Incorporated is their pipeline. Do they have drugs in late-stage trials that are showing strong promise? Are they nearing the end of their patent protection for any current blockbusters? These are the kinds of things that will tell us if the company is moving forward or facing headwinds. For instance, if they have a drug that treats a rare disease and that drug is performing well in the market, it means they likely have increased sales and revenue. If a competitor also has a similar drug that might put pressure on their sales, let's consider a hypothetical situation. If their revenue grew by, let's say, 15%, that is generally positive, but we need to compare it to their expenses. If their expenses grew even faster, their net income or profit could decrease. A Warren Buffett-style analysis would look past the headlines and focus on sustainable earnings power and the quality of their management. Are they making smart long-term decisions about which drugs to prioritize? Are they managing their cash burn effectively? In the context of the biopharma industry, achieving profitability can be a long and winding road, often punctuated by significant investments in research and development. Reporting losses in early stages is common for companies focused on innovation. The crucial question is whether these investments are on track to yield truly transformative therapies that can capture significant market share and generate substantial revenue down the line. Let's also think about risks for Amicus Therapeutics Incorporated. A major risk would be clinical trial failures. If a drug they have invested heavily in fails to show efficacy or safety in trials, it can be a huge setback, costing millions and delaying or even ending that product's development. Another risk is regulatory hurdles. Even if a drug works, it must be approved by regulatory bodies like the Food and Drug Administration in the US and similar agencies elsewhere. Delays or rejections can significantly impact a company's trajectory. Conversely, opportunities lie in breakthroughs. Discovering a truly novel treatment for an unmet medical need can be incredibly lucrative and impactful. Expanding into new geographical markets or gaining approval for their drugs in additional countries also presents significant growth opportunities. Looking at the overall direction of Amicus Therapeutics Incorporated, if they are reporting consistent revenue growth from their existing products and showing positive progress in their late-stage drug pipeline, that would indicate a strong upward trajectory. Weaknesses might emerge if their expenses are consistently outpacing revenue without a clear path to profitability, or if their pipeline shows signs of stalling. Now, looking at these results more broadly, Amicus Therapeutics Incorporated appears to be navigating the complex biopharmaceutical landscape. Their focus on rare diseases means they are targeting markets with high unmet needs, which can lead to strong pricing power if they are successful. The key will be in the continued success of their R&D efforts and the effective commercialization of their therapies. A notable risk to keep an eye on is the general uncertainty surrounding drug development and the competitive pressures within the industry. Their financial health hinges on their ability to bring innovative treatments to market successfully and sustainably. Alright, that is our breakdown of what this filing likely signifies for Amicus Therapeutics Incorporated. What is your take on the company's direction and their financial reporting strategy? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.